Well, the outcome of the Reserve Bank of India's monetary policy, much along expected lines, the key policy rate, which is the repo rate, the rate at which RBI lends to banks, that was left unchanged at 6.5%. The stance of the policy, which indicates future actions, was also left unchanged at withdrawal of accommodation because there is still excess liquidity in the system, and RBI sounded a cautious note because they worry if the vegetable prices will lead to higher inflation in future. That said, the growth forecast for the current financial year, which was at 6.5%, has been left unchanged, as has been the forecast for the next few quarters, which the RBI had earlier outlined. In terms of the consumer price inflation, that has been revised upwards, higher than what the market was expecting for the full year. Earlier, it was at 5.1%. Now it has been revised to 5.4%, and it is expected to remain above 5% at least until the first quarter of the next financial year, that is FY25. Now, RBI has made it very clear it is not enough to maintain CPI inflation in the target range of 2 to 6%, which they will by law mandated to do, but more important, to align it to the center point of 4%, and that is going to be the target of the Reserve Bank of India. As far as home loans are concerned, don't expect any change, because the interest rates have not been hiked, and therefore loans that are linked to this external benchmark of repo rate will also remain unchanged. The markets are expecting the rate cut to start perhaps in the first quarter of the next year, but given that the inflation projections are still higher than the 4% mark that RBI is targeting, the rate cut cycle is also likely going to be pushed a little further out. So no impact as far as your home loans or EMIs are concerned, but there is good news where the Reserve Bank of India governor announced that your equated monthly installments or EMIs that you pay, there will be greater transparency on interest rate resetting of those by banks. More details on those are still awaited. Also in terms of UPI, the offline UPI payment that you can make using UPI Lite, the transaction limit for that has also been increased from 200 rupees to 500 rupees. And you can also use near-field technology to make payments using offline UPI.
After detailed deliberation on all relevant aspects, the Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6%, 6.5%. It's 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate stand at 6.75%.